The Little Book of Common Sense Investing. The Little Book of Common Sense Investing by John Bogle, a comprehensive summary. Intro. If you've ever wondered how to make your money work for you in the most efficient and low-stress way possible, The Little Book of Common Sense Investing by John Bogle is your answer. This powerful yet straightforward guide cuts through the noise of complex financial strategies and offers timeless advice that has reshaped the world of investing. It's not about risky day trading or chasing the latest hot stock. It's about a tried-and-true method that anyone, no matter how little experience they have with investing, can apply to build long-term wealth. Today, we'll unpack why The Little Book of Common Sense Investing is so influential, the story behind it, and the key principles that make it one of the most important investment books of our time. John Bogle, the man who changed the world of investing. Before we dive into the book, let's take a moment to understand the man behind it. John Bogle was the founder of Vanguard, one of the largest and most respected investment management firms in the world. But what's even more significant about Bogle is that he changed the way we think about investing, and, perhaps more importantly, how we can access the financial markets without being taken advantage of. In 1975, Bogle introduced the first index fund for individual investors, a revolutionary product that would come to define his legacy. Prior to Bogle's innovation, most investors could only access actively managed funds, where fund managers picked stocks in an attempt to beat the market. But here's the thing, most of those fund managers didn't outperform the market in the long run, and their hefty fees made it even harder for investors to get decent returns. Bogle's breakthrough idea was simple yet profound. Instead of paying someone to try to beat the market, why not just invest in the market itself? So, he created an index fund, which mimics the performance of a broad market index like the S&P 500, at a much lower cost than actively managed funds. This idea wasn't just a smart one, it was a game changer. However, it wasn't immediately embraced. Many financial professionals thought Bogle's index fund was too passive and would never be successful. But over time, it became clear that Bogle's philosophy was not only correct, but it was also the best way for most investors to achieve long-term success. Today, index funds are used by millions of investors worldwide. Why did Bogle write this book? After building Vanguard and witnessing the growing success of index funds, Bogle wrote The Little Book of Common Sense Investing to share his investing philosophy with the public. His goal wasn't just to promote Vanguard's funds, it was to educate individual investors on how they could take control of their own financial futures in a low-cost, no-frills way. Bogle believed the financial industry was, in many ways, taking advantage of individual investors. High fees, expensive fund managers, and the hype around beating the market were costing investors far more than they realized. He wrote this book to help people understand that it doesn't take a fancy strategy or insider knowledge to achieve financial success. What's required is patience, discipline, and a simple, consistent approach to investing. In a world that's obsessed with hustling and seeking short-term profits, Bogle's message was, and still is, refreshing: slow and steady wins the race. Core principles of the book. So, what exactly does The Little Book of Common Sense Investing teach its readers? Let's break down the core principles that Bogle introduces throughout the book. 1. The power of low-cost index funds. The main thesis of Bogle's book is simple: the vast majority of actively managed funds underperform the market in the long run. This is because the fees and costs associated with actively managed funds often eat into the returns. Instead of trying to pick the next hot stock or rely on fund managers who may or may not beat the market, Bogle encourages investors to put their money in low-cost index funds, which track the performance of the entire market or a specific segment of it. The beauty of index funds is that they offer diversification, which reduces risk, and come with low fees, which help preserve your returns. 2. The impact of fees on long-term returns. One of Bogle's most famous quotes from the book is, "The costs you pay are the returns you don't get." In the book, Bogle explains how seemingly small differences in fees can compound over time, leading to significant differences in your investment returns. For instance, paying an extra 1% in annual fees might seem trivial at first, but over decades, it can reduce your final returns by hundreds of thousands of dollars. This is why Bogle emphasizes investing in low-cost options. A low-cost index fund could save you significant amounts over time, without compromising on returns. 3. The importance of a long-term mindset. Bogle advocates for a long-term, buy-and-hold strategy, where investors commit to holding a diversified portfolio of index funds over several decades. This approach minimizes the impact of market volatility and short-term fluctuations. Bogle advises against trying to time the market or jump in and out of investments based on short-term trends. History shows that markets tend to go up over the long term, and by staying invested through ups and downs, you're likely to reap the rewards. 4. Avoiding the herd mentality. A huge part of investing is staying grounded and avoiding the psychological traps that many investors fall into, especially herd mentality. In times of market panic, investors often sell their stocks in a rush, fearing more losses. On the flip side, during bull markets, people might overbuy out of excitement, only to face disappointment when the market corrects. Bogle's advice is to stick to your plan, don't get swept up by the noise of the financial world. The market goes through cycles, but in the long run, it tends to reward patience and discipline. The impact of the book on people's lives. The Little Book of Common Sense Investing has had an enormous impact on the way individuals approach investing. But its influence goes beyond just financial principles, it has changed the entire philosophy of investing for ordinary people. 1. Empowered regular investors. Before Bogle's work, investing often seemed reserved for the wealthy or those with insider knowledge. The average person had limited access to the strategies that could grow their wealth. But Bogle's creation of index funds democratized investing, making it accessible and affordable for everyone. Today, millions of people rely on index funds to build their retirement savings, college funds, and wealth for the future. And thanks to low fees, they're able to grow their money without losing a significant chunk to management costs. 2. Change the industry. The rise of index funds has completely transformed the investment industry. Vanguard, along with other firms that followed Bogle's lead, forced other fund managers to reduce their fees or offer similar products. The index fund revolution has brought transparency and fairness to an industry that was once shrouded in high costs and complexity. Bogle's work also helped highlight the inherent flaws in active investing. His focus on low-cost, passive investing has become the cornerstone of modern financial advice. 3. Financial independence and retirement. Many people have credited Bogle's principles as a foundation for their journey toward financial independence, FI, and retiring early, FIRE. The idea of investing in low-cost index funds and consistently adding to your portfolio has given individuals the confidence and strategy they need to grow their wealth steadily over time. Whether it's retirement at 60 or at 40, people are using Bogle's teachings to take control of their financial futures and live life on their own terms. Conclusion. In conclusion, The Little Book of Common Sense Investing is far more than just a guide to investing. It's a manifesto for simple, patient, and intelligent wealth building. John C. Bogle's philosophy has revolutionized how we think about investing, putting the power back into the hands of everyday individuals. If you're looking for a strategy that's rooted in common sense, backed by years of research, and capable of delivering real, sustainable returns, this book should be at the top of your reading list. It has helped millions of investors cut through the noise, avoid costly mistakes, and build wealth for the long haul. So, whether you're just starting out in the world of investing or you're looking for a smarter way to grow your money, The Little Book of Common Sense Investing offers timeless wisdom that's as relevant today as it was when it was first published. Now, if you're curious about how exactly you can apply these principles to your own portfolio, be sure to stick around for the full video, where we'll break down each of Bogle's key lessons and show you how you can use them to start building wealth the smart way.